Welcome to the Indian Silicon Valley podcast. I'm your host, Gauravs, and today I have with me a very special guest. Join me in welcoming Gaurav Kumar, the founder and CEO of CredAvenue. Thank you so much, Gaurav, for joining me. Incredibly delighted to be hosting you today.
My pleasure. Thanks a lot for having me.
Glad to hear that, Gaurav, and I must acknowledge at the very start that one thing that I've observed with CredAvenue is the kind of clarity and structure you've had from day one. And I want to start there, considering that you've been a serial entrepreneur in the past, you've started companies, scaled them. What is it like to have that vantage point of having built something successfully in the past and then tethering on a journey? If you can talk to us about some of those past experiences that influenced how CredAvenue got started, I think that would be a great starting point.
No, I think that definitely helps, right? I think overall, when you have built something in the past, the muscle memory kicks in.
Yeah.
So a lot of things which you think about when you are starting something as a first-time founder, I think are very different, right? So right from how you think about your capital raise, how you think about your governance structure, so especially on governance, we over-indexed, right? Because if you get the overall governance structure and the team right, the rest of it follows, right? Whereas if you look at in my first startup, the second startup, you might not over-index on that. You might largely first focus on, say, for example, trying to get the product market fit, right? Or trying to, hire a certain engineer who will come and solve for this. So I think the muscle memory becomes very, very important. I think starts helping you when you have scaled something and when you are starting again. Few things I think which also helped was largely, I think, the team. I think having a very, very strong foundation of what you want to build, writing that down, especially the end state, right? When you're getting the team along, I think it's very important to provide written clarity to what the end state is, right? Whether you reach that end state in 3 years, 5 years, 7 years, does not matter, but at least the founding team which is coming together should definitely have a very shared sense of the vision, right? Which to my mind is the why, right? So I think our focus has largely been on the why. And the reason why to your point, the reason why we started CredAvenue, having been in the financial ecosystem, now this is my fourth startup. One fundamental piece for us, having looked at the overall enterprise debt finance space, the debt markets in India have still not deepened to the level we think the debt market should have deepened, and at least at three structural level, right? So, more at a sovereign level, given that we are a triple B minus sovereign, I think we have our own challenges in terms of how do we finance a lot of what we want to build. Second is on the enterprise level. A large part of today debt largely goes to AAA, AA. Almost 90% of debt flows to these two rating categories. And then third is on the individual level, right? So how do we use the power of debt and the power of debt markets to genuinely transform human potential, right? I think that to our mind has been our calling, and that's why we decided that we had to build that infrastructure at CredAvenue, which can go on to power the debt markets.
Absolutely. No, I think that's super helpful in terms of context, and really love the fact that, the muscle memory kind of helps. Is there any, just outside the box, is there any downside to knowing too much when you're spreading out on a second journey or a fourth journey for that matter? Do you think there was any baggage that you carried on of knowing too much or anything of the kind when you were starting CredAvenue?
Yes, I think especially, I would say things which you could have done differently. I think when you have build organizations which might have a different narrative, right? Because the domains are very different, right? So building a financial services business in the lending space is very different than building a financial services business which is largely product led, right? Mm-hmm. So I think some of the biases and baggage which you end up carrying are largely to do with the type of business you have built. Given a choice, you could have over-indexed in terms of sometimes over-indexing on product while compromising a lot on distribution, right? So I think, sometimes our own view was that the product should lead, and, a lot of that should be where our investment should go. But given the nature of the business, I think different businesses are different. And given that we were not building a consumer-led business, right? I think in the hindsight, having a significant investment coming in the right GTMs, right? So your go-to market changes significantly given our nature of business. How should we have genuinely carved out those go-to markets and not kind of looked at a generic framework? I think was something which we learned very early. Within the first 6 months, 12 months, we realized some of the biases we were carrying from what we had built in the past. And it was also important for a lot of us to relearn, right? Including me, right? So I think me and the team, it was important that we think from first principles, given that what we are building, and this is a question which I get asked by most of the investors who have looked at CredAvenue, that there is no comparable to what we are building at CredAvenue, right? So it's not like something in the US or something globally has been built and we are trying to build that for the Indian context. So it was also much more important for us that we don't carry some of those biases and think from first principles as we're building this out bottoms up.
Absolutely. No, I can only imagine how that must have played out, but lovely to know that, there was a lot of cognizance in terms of the downsides as well. But going forward, now that we have context to pay, why did you approach the problem statement the way you did? Talk to us about some of the things that you realized on day one when, reality hit the ground and you've had this sense of clarity to build a platform approach, to go for infrastructure and, go very horizontal as well as in depth in those verticals, right? If you can talk to us about some of the formal approaches of starting up, right? What was the first 0 to 1 journey like? I think that would be super helpful for the audience.
Sure. So I think we started the 0 to 1, and feel free to stop and we can dig deeper. As we started, I think we were thinking of largely solving this through a marketplace approach, right? And as we were building the marketplace, in the 0 to 1 phase, we realized that approach would not be the right approach for us to take because the marketplace would be very volatile, right? So as we started building the marketplace at 0 to 1, the problem was not on the borrower side, right? Given how underpenetrated the markets are, the challenge was very early, very evident on the providers of capital, right? The providers of capital simply won't trust the platform, right? And in the 0 to 1 phase, the other challenge we started facing very early was about, your own recommendation, your own algorithm, what comfort do providers of capital have to really trust your platform, right? Versus their own sense of running those businesses over the last 10 years, 20 years, 30 years, right? So it was largely a very clear learning in the 0 to 1 phase that if we had not taken a step back and we recalibrated within the 0 to 1, right? So our 0 to 1 saw a significant shift. And then from 1 to 10 is that we took a step back and said, unless and until we invest in building the operating system, right? And we invest in building the fulfillment stack, the marketplace will continue to be extremely volatile and we will not have the right amount of trust which comes in on the other side of the marketplace. Because if you look at our marketplace, the constraint very early was on the providers of capital, right? So we actually, stopped and we over-indexed almost 80% of our product roadmap, right? We actually moved it to the providers of capital and largely focused on building the operating system and fulfillment, right? Which gradually started bringing in a lot of trust, a lot of alignment to what we wanted to do, because they could actually come for the operating system and fulfillment and hopefully stay for the network, right? And as we started more over-indexing on that, I think we saw more and more success coming in, right? The other learning to our mind very early in the 0 to 1 phase was largely about how we wanted to, think through, nuts and bolts of interoperability and interoperability, right? Because overall, if you look at the entire success on payments has largely been, how UPI has transformed that. But in lending, we realize the challenges are multifold, right? And there is a reason why even Okane has had its own set of challenges in terms of scaling, right? So as we started getting into nuts and bolts, again, it was important that we focused on how do we build a self-serve overall API stack, which largely becomes the unified API, right? So otherwise, the approach of learning multiple products, the products were becoming more verticals, it was not coming across as a completely unified CredAvenue offering, right? So I think these two were, to our mind, important aspects within the 0 to 1 phase to recalibrate. As the moment we started going to the market, we realized that these two structural changes need to be done within the 0 to 1.
Got it. Got it. No, I think that's very interesting. And a pattern that I'm seeing is, I mean, there have been headlines that CredAvenue has been the fastest fintech unicorn and whatnot, but the underlying factor is speed as a moat, right? And correct me if I'm wrong, but there's been a lot of great speed in terms of iteration, a lot of great speed in terms of launching new offerings and building on top of distribution, right? Talk to us about how do you inbuild that speed within the company spectrum, and maybe also as a culture. If you can, maybe expand on that, I think that'll be super helpful, Gaurav.
Sure. I think one important lesson for us was also around velocity, right? I think getting the speed and direction both right.
Yeah.
Right. So I think the first piece came in from written clarity. So I think we genuinely obsess about leaders providing written clarity, right? We demand that of the leaders, right? So anything which we do at the leadership level, there has to be a very detailed sense of end state to where each of those pieces need to be, right? Now, once that's there, I think the velocity then becomes much more important, that you have the right direction, and then how do you get the right speed and momentum going in? To our mind, three things more tactically. I think one is, although as you very rightly said, we are largely a horizontal, but it was important for us to break down each part of the horizontal into very, very defined verticals. So at CredAvenue today, if you look at, we are very, very small units of verticals with a single threaded leadership where everything is verticalized, right? So right from engineering to product to data to design to business, for that particular part of what we do is completely verticalized, right? So the moment we go horizontal, we go vertical, and then we go horizontal, we go vertical, right? So at each stage, we ensure that we are tactically very vertical, right? The second piece is about very clear single threaded leadership and delegation, right? To our mind, as I said, leadership is not about experience. Leadership is about taking decision, right? So it was very important that we knew who the right person for that decision is going to be, and what's the level of accountability which that person needs to have, right? So we did that. And what we do also is to, for each of these defined verticals on a tactical level, we call it like mission critical, right? So there are so many things going on, but every leader needs to only focus on 3 mission critical pieces, right? Which then gets baked in our weekly reviews, right? And there we iterate a lot. So anything which needs problem solving, right? We try and problem solve that immediately, right? So we do use a lot of internal tools to get things organized, right? We are not a big fan of long volleys on emails, etc. It just tries and derails the organization, right? So for speed, I think clarity is important. Second, very decentralized vertical structure. And third is measurement, right? That how do you measure that you are moving on the right direction at the right speed, almost every week, right? And it does not come to you as a surprise. And if things go off, we recalibrate. Lastly, I think to be also fair with you, from the time we started, I think what has also helped is very clear sense of ruthless prioritization, right? So where I think startups sometimes, in my own experience and in my hindsight, in my first startup, I don't think there was a sync between what we wanted to achieve in a quarter and how the calendar looked like. Right? So I think the calendar becomes a very important mirror for you, right? So if you have taken something in a particular month, in a particular quarter as your OKRs, and if your calendar is not reflecting that, right, and you're constantly doing something which is not going to move the needle, you will see a lot of challenges in the short term, while you have to constantly think mid-term to long term. But sometimes I think there is lack of sync between what your priorities are and where your time actually goes, and your calendar is a good mirror or reflection of that on a day-to-day basis.
Got it. No, I think those are all spectacular pointers and very useful for especially young founders listening to this. Thanks for sharing that, Gaurav. But I think the other important piece of your business is the variety and diversity in stakeholders that you deal with, right? Think of a banking partner, think of a enterprise that you deal with, and multiple other folks. Talk to us about how do you as a leader shape the organization in a way where each stakeholders is equitably distributed and important, right? How do you manage stakeholders in an effective way is something that I would love to know, especially considering the variety of what you serve.
Again, a great question. I don't think a lot of people have asked this. I think the nature of the platform today, if you look at, I think there are three parts to it. There is a B2B part of what we are building. There is a B2B2C part of what we are building, and then there is a small B2C on our fixed income side. Okay. Right. So I think what we realized was, again, from a stakeholder management perspective, especially on the providers of capital, right? And especially people who are looking at building something in the financial services space on the enterprise side, the approach has to be bottoms up and top down, right? Okay. So kind of splitting into three parts, right? One is to start with your product roadmap, right? Very early, I think what also helped was for each part of what we are doing, we had almost like a product advisory council where we brought some of our core constituents on the customer side, both on the providers of capital and the lender, to be a part of our formative, almost like the product committee, right? Where we are getting constant feedback from them. And it's almost like co-creation, right? So they exactly know where we are, what we want to do. Because, at the end of the day, if you're building something on the B2B side or B2B2C side, they need to own a part of you, right? I think if they are not owning a part of you, then it becomes very transactional, right? And then you become a channel. So one learning which we had, and I can share that, is that when you're doing this on the enterprise side, the call which you need to take is whether you want to be a channel or you want to be an operating system, right? Now, if you're a channel, then you start getting into market share, market game, etc. And a lot of that kind of sale becomes like a bottoms up sale, and the stakeholder management is a bit broken, right? But the moment you are taking a call where you want to be largely on the other side, being an operating system, right? Co-creation becomes very important, right? So that to our mind was central. The second piece was about also varied stakeholder, as you rightly said, within a particular ecosystem, or what I call as the micro ecosystem, right? From the tech team, the sales team, the credit team, risk team, right? Bringing all of them on the same page, I think is super important. Third piece to our mind was over-indexing on content, right? And building this through more thought leadership, right? Because when you're largely building something on the enterprise side, broken into B2B and B2B2C, the content and your knowledge and thought leadership is what will start bringing the stakeholders in, right? And lastly, to our mind is nobody should get surprised, right? So very tight cadence. Bad news should go first, right? So if something is not happening, you're not able to deliver on the time you have committed, right? You can't do it a week before the deadline, right? So how do you build trust? I think the trust largely gets created not only by the quality of the product, but very clear communication and no surprises to the stakeholder, because they are dependent on you, right? And they are cascading a lot of things basis what they have heard, right? So you definitely have to use a layered approach, right? Mix of channel and content, and on very high touch communication to ensure that everybody is co-creating and owning a part of what you're building.
Got it. No, that's interesting in the sense that it lays down a framework for aligning the entire organization, and also in terms of the leadership structure that it should have in terms of stakeholder management. So super helpful there. But the other interesting piece, and I'd love your thoughts here, is the balance between reinventing the wheel and not reinventing the wheel as much, because while it is important to do things from scratch, it is also important to keep the status quo as is, does not disrupt too much. What I also mean by that is on the disbursement side, while a lot has happened in terms of aligning stakeholders, on the collection side, you've done a lot of new innovations. If you can talk to us about some of those structures, right? Like maybe where you've innovated from scratch and where you've kept things as is and brought the entire ecosystem together. I think that would be super helpful to just understand from a point of view as to how founders can manage things, I'd say.
Absolutely. So I think where I think to our mind, where you are going to see a lot of innovation coming from our side. One is on how we make this as a complete unified operating system, right?
Right.
Because on the debt side, we have not seen this being built, right? So how do you both interoperate? How do you plug in and get the network, and not only get the network in one product, but get the network across multiple products, which are very different structurally,
Yeah.
right? So a lot of, I would say, first principle thinking and innovation on unified, interoperable layers, which we have ended up building. I think that, to my mind, is going to just turbocharge how debt flows to the last mile in the ecosystem. Right. The other piece is some of the investment and innovation we are doing on the collection side, because for the debt markets to deepen, you also need to have a very strong collection infrastructure.
Right.
Right. So there, a lot of innovation has gone in even managing pre-dues, and how do you engage with the customer when the customer is not defaulting, right? And ensuring that a customer continues to be on top for the right reasons, right? So a lot of product development and innovation has come, which we are calling as more about debt management rather than collection.
Got it.
Right? And a lot of first of its kind innovation on debt counseling and ensuring that the customers are on top for the right reasons.
Yeah.
Right? So I think these two, to our mind, would be what will just catalyze a flurry of what we are building. I think the financial services products will just sit on top of this. Right? Now, for example, we are a very late entrant in supply chain, right? So we are not genuinely innovating on supply chain, right? But we are just looking at what the customer needs, again, from a unified perspective, right? A lot of pieces which has already been built by our ecosystem. So we have a very, very good framework on what we should genuinely build, because today, if you look at the only constraint which every organization and founder will have is going to be around engineers.
Yeah.
Right. So I think that's your limiting function. So you need to be very clear what you will genuinely end up building and what you will partner. Yeah. Right. And we took a call on anything which has largely to do with public nature of that instrument and good, we will immediately partner. Right. So anything to do with third-party API, anything to do with what's already available in the market data, those kind of infrastructure and layer, it was no reason for us to reinvent the wheel. Right. Whereas, where you are going to genuinely reinvent is only basis the why. What is moving the why is where you need to really go about innovating, which was, to our mind, the entire unification piece and the entire collection infrastructure. Right. Rest of it, I think, is much more about making things more self-serve.
Got it. No, that's awesome. I think super to hear the approach there. But what's related here is also innovating at scale. And now that you've spoken about what are the things that you want to change, there's also been a large amount of volume that has been flowing in, especially considering how things have moved in the past. And in the brief time that CredAvenue has been here, there's a lot of scale that you've already seen. Talk to us about maybe some of the similar innovative characteristics that you build within teams that can be managed, especially at scale. Because while we understand that innovating is a necessary component initially, to maintain that DNA at scale is a problem that most companies face after a point. Would love to hear your thoughts and how you've been able to encounter this.
I think the first piece there itself, Jivraj, I think my view is, building a culture where you are talking about a lot of things which are not going well, right? Okay. So because unless and until if you're largely as an organization, and this is again a learning of building this now for the fourth time, is that a lot of discussion mostly centers around what has succeeded, right? And not enough focus on the obvious attempts of what we wanted to do, on the problem statement we took, the challenges we had, right? And what finally did not see the light of the day, right? So a lot of focus early days, I think it largely comes from the founder, because to my mind, apart from everything else, what I call as, you can call as innovation, or you can call it like risk taking, right? It gets ingrained very early, seeping it from the founder. So three things, right? One is about walking the talk, that you genuinely want to build something which is long term. Because if you're not building something in the long term, you cannot innovate. You will go very tactical on very, very different dimensions of what you want to do, right? So how do you walk the talk on genuinely taking things which are long term, which might not see the light of the day in this quarter, the next quarter, right? The second is, when you're building something first of its kind, we got a lot of feedback in the 0 to 1 phase, right? Because we were innovating, the customers could not visualize it or see it, right? So many of them actually came back with feedback saying, we don't need this, right? So you should stop. You should not be actually going in this direction, right? Now, when you start getting that kind of feedback, right? Now, whether you go by a metric and measurement of what the customer is saying and take that into your overall roadmap and innovate, or you still carry on with on your own gut and say, we know the direction we want to go, and might be the customer is not able to visualize, but we will visualize on their behalf and continue building, right? And third is, when things are not going well on certain large projects, etc., which have been taken, right? How do you talk about it? How do you celebrate? How do you recognize? Because the moment the team starts getting a sense that you mean innovation, but you're not genuinely risk taking, right? And they get penalized significantly, right? They get penalized on all the dimensions of what's their day to day. They will stop risk taking, right? And when they stop risk taking, when the last guy stops risk taking, you will not be able to innovate, right? So I think it's very important that you get this right in the first 3 months to 9 months.
Right.
If you don't get this right in the first 3 months to 9 months, it's very, very difficult to rechange this or recode this DNA of innovation, or what I call as risk taking, right? Yeah. The other piece to your question, I think at scale, what we constantly do is, we have, for every leader and for everybody in the org, what we have done is, we have split it into 3 buckets, right? What we call as bucket 1, bucket 2, and bucket 3, right? So bucket 1 is about keeping your lights on, right? It is about what you have promised to the customer, what needs to be delivered to the customer, right? Which is about your quarterly OKRs and how do you go about delivering on those, right? Second is about what gets added to the roadmap adjacent to where the current products are, right? Where you are innovating on top of what you are seeing, right? And the third is, to my mind, the large moonshots, which is our bucket 3, right? So right from everybody in the org, they are encouraged to focus on all the 3. Right? So I think these 2, I think, will be important. And I think, as you rightly said, we are at very large scale, right? But I don't think we are a startup from a scale perspective, but we would like to be a startup for the next 20 years.
Yeah.
Right. So sheer amount of your agility, speed, velocity, and your ability to constantly innovate, I think, is going to be the key for us as we move to the next level.
Absolutely. No, I think that last piece is super important, because to maintain that DNA and then executing on top of it is the reason for, such amount of success. And if companies can do it at scale, I think there's so much value to be created, as CredAvenue is a testament of. But I love the line of thought. I think there's a lot of clarity in terms of the practical action, meaning, and a lot of meaning meeting the eventual goals, which is something that I'm observing as a line of answering. But the other piece is that recently you've announced a couple of acquisitions, if I'm not wrong, and that's the other piece of growth, right? And that might be called inorganic growth. But if you have any tidbits to how to manage such culture integration and how to understand how real collaboration can take place beyond the comfort of your internal household, would love to understand how some of these pieces play out, and tactically, how do you look at maybe acquisitions and how they can be better integrated, especially in an Indian ecosystem where the M&A ecosystem is only now getting robust. So would love to hear that, your thoughts there.
Great question. Great question. I think, we have done 2 fairly large, I would say now integration. I think one org is close to 450 odd. The other one is close to around 170, 180. So almost close to 600 odd people coming on onto the platform.
Yeah.
Now I would more get slightly more tactical. I think first is about the why, right? So for any integration to really succeed, right, that you will know only after a year, 2 years, right? But getting very tactical, I think what has worked for us is again very tight focus on why we want to acquire, right? I think we have been very clear that we will not acquire anything for revenue, right? So unless and until there is a very high correlation and impact on our own why, right, we will not look at acquiring, right? That's one more tactically. Second tactical point is we will not acquire and build on our own, right? So the founders have to be missionary founders who continue to lead and continue to build, because at the end of the day, it was their idea, right? And their team of thinking and how they're going about it. But the ecosystem which we are providing is just going to catalyze where we can take this together, right? So it is very important for us tactically that if founders don't want to continue, we will not acquire. Right? So founders mandatorily have to be coming on board, and we are a big fan of founders, ex-founders, right? So today, if you look at even at CredAvenue, we have so many founders who have come on board to build this with us, because sometimes almost 90% of your success, at least I believe, is more about timing and destiny, right? Yeah. So every founder is an exceptional founder, irrespective of how much scale they have been able to achieve, right? Just the journey and their call of starting something is just exceptional. Right. So second point is ensuring that they are coming and having a seat on the table, right? And continue to build on top of their vision. What we will bring together is tremendous amount of synergy at CredAvenue, distribution, capital, and what will go in terms of strengthening the why, right? Third is again more tactical from an integration perspective. What we have done is we have kept these orgs separate. Right. So there are certain pieces which we want to integrate, right, which are largely to do with accounts, finance, HR, the entire standardization, perks, benefits, which flows, stock option, right? Those are things which we have tried to centralize. Rest of this, we have tried to completely decentralize, right? And fourth point is very early engagement and putting together a joint plan, which we call as the joint GTM. So while these companies continue to have their own GTM, there is a common GTM between these companies and CredAvenue, right? Which we focus on together, while the founders continue to also execute on their own set of customers, because these companies have their own clients. They have their own sense of commitment, right? For example, at Spocto, we have taken a back seat, because Spocto today on the collections platform, we are already in MENA, right? So we are actually backing Sumit to actually lead our entire international expansion. So CredAvenue is taking a backseat. We will not expand outside India for the next 2 years. Whereas we'll let Sumit and team lead this for us, because they have been there for the last 1 year already. Right. So I think it's much more about some of this tactical understanding very early, right? And just the utmost amount of respect for founders and what they're building, and not trying to appropriate somebody's vision to your own vision. Right. There is a reason why you went ahead and acquired something, and it's never about capital, right? So no amount of capital can lead to a successful integration, right? So these four things, I think, to our mind, have been, although early days, but I think these four things are very, very important, so that the teams coming together also have their own sense of, purpose, clarity, etc. And last point I would leave with you is that we are not force-fitting CredAvenue culture onto some of the companies which are coming in, because they have been there for last 4 years, 5 years. They have their own sense of culture, right? What we do is we put a common tenant and ground on what's like the CredAvenue culture. So I'll leave one anecdote with you. The way we discuss with founders when we start the overall process, right, is more about thinking about a joint family and a nuclear family. So while we are a joint family, there are certain protocols which you need to maintain for the joint family, right? But after that, you are a nuclear family. You have your own set of deliverables, you have your own set of teams, you have your own set of purpose, etc., etc., right? But when you come together as joint family, you get the synergy of the joint family, right? And you maintain certain protocol to be in the joint family. But after
Absolutely.
that, you are a nuclear family.
Got it. Got it. No, that's wonderful. I think speaks a lot about keeping the fundamentals alive and not making this inorganic in any way, even though it may seem like so. But I think that piece is very important to highlight. This has been wonderful, Gaurav. And as we go on to some of the concludatory aspects, I must mention that the high talent density at CredAvenue is one of the highlighting factors of the journey, of course. And being a serial entrepreneur, I'm sure the over indexation on people is something that you mentioned throughout as well and in the past. Talk to us about maybe identifying some of the top leaders, especially when you're growing at a rapid pace and culture integration becomes very important. If you can maybe lay down some of the groundwork of hiring and also maybe firing, right? Because I think one of the pain points that I have observed briefly in the 100 odd episodes I've recorded is that every founder talks about hiring and firing being a large pain point that continuously evolves as a learning journey. So any thoughts there would be super helpful here.
Absolutely. So if you look at, I think, the getting the right set of people, even, I would say till we were close to 400 people, right? I used to meet almost all of them.
Yeah.
Right? So I think if you ask me, I think 80% of my time goes in terms of meeting people whom we want to get on CredAvenue, and it's a mix of meeting the customer and meeting people whom we want to get, right? So 80% of my own time goes into just doing these two, right? So the most important. So sometimes as founders, we get very excited about the next product we are launching, getting excited about meeting customers, getting some of those feedback, getting our hands dirty on day-to-day execution. But this is the most needle movement activity which I have personally seen in the last 4 companies, right? So if you spend time here, the ROE as a founder is the max. No other activity on your calendar will have this kind of impact and ROE which getting the right person will have, right? So I think the way to think through this, to my mind, are in 3 stages. When you're starting something in the 0 to 1 phase, it's more about you actually going out of your way and selling the story. Irrespective of what you have done in your past does not matter, right? Because the A plus talent and A talent has a lot of options, right? So sometimes you might think that you have built some things in the past and you have great set of investors coming on board, and you will be able to get that talent, but that won't happen, right? So you have to go out of your way to get the A plus and A talent, right? Second is over indexing on network. So what we do, just to share with you very tactically, in our weekly discussion, every leader, they have a board which says how many other leaders and how many other team members they have been able to get into the org.
Wow.
Right? So that's a leaderboard which we focus on, we take a lot of pride on, apart from other leaderboards, right? And we constantly look at the person who is actually getting a lot of people to come on board, because then you get the right culture built in very early, right? So that's the second tactical bit. The third bit, as you very rightly said, I look at one of the most important aspect for me personally, and you have hit the nail on the head. If you ask me, one piece around people, which is like a make or break, is talent density. It's not just about getting the right person, but it is about how dense the talent is in your org. Because many orgs, they get derailed because the talent density is not very high and it becomes fuzzy. So a lot of your processes, a lot of your systems, etc., is largely indexed on managing the 10%, 15% who are not aligned to what you're doing.
Yeah.
And the moment you have a high talent density, you will automatically have high empowerment, you will automatically have high quality, and you will automatically have high levels of decision making and accountability, right? So we ensure that in our overall monthly and quarterly check-ins, if someone is not fitting in, it might not be about the individual, it might just be that it might not be the right fit with us. We also communicate that very early, right, to ensure that our talent density continues to be very, very high. And as we are rapidly growing, right, we have gone almost 300%, 400% in terms of people. This year we are going to close to 1,300-1,400 people from 600, right? So tactically at a leadership level, I think that becomes important, right? The fourth piece to my mind is, I'll leave it with you, which is unique. Our overall performance evaluation for leaders is split between 100% on their own goals and 100% on MNPS. So the MNPS for a leader becomes a circuit breaker, right? Because the leaders have to lead by example on culture and aspects of culture and how their team is really resonating with them. We do like a quarterly check-in on MNPS, right? To ensure that the MNPS continues to be high, right? Because, overall that is what will cascade. So when you're talking about an org culture, I think it just becomes a microcosm, right? And lastly, I think it's also about open town halls and open questions, because when you are getting A plus and A talent, the first thing which you need to be ready for is very high degree of debate and questioning, right? Now, if you're not open for that, you will not be able to have A plus and A talent. You will have a B talent and B will bring in C, and then A will leave. So it's a vicious cycle, right? So having very open dialogue, open town hall, to my mind, is important. What we have done, I can share with you, is twofold. Even before our financials and number goes to the board, it gets actually walked through in detail by our finance head to the entire org every month, right? Where everybody has a view on what's working well, what's not working well. And second, we do our weekly town halls. We don't do any anonymous questions. Everybody should be asking, or should be empowered enough to ask anything which crosses their mind, right? So I think you need to build an enabling environment for that A plus and A talent to be there, right? And they're largely not coming in for, to my mind, money or wealth creation, right? They are largely coming in for the purpose, which means that constantly you have to bind them with the why.
Absolutely. All of those pointers, I think, are absolutely brilliant, because they lay great groundwork in terms of being deliberate about talent management, not just being, not just saying it, but being as deliberate as possible and coming from the top. So lovely to hear that, Gaurav. I think I have one last question on building a CredAvenue, post which I'll move to concluding questions. But the interesting piece about, building on top of distribution is that CredAvenue has, in my opinion, maintained a great sense of depth in verticals, as well as kept on expanding horizontally, right? If you can help us expand and maybe explain in detail as to how this combination works, especially for companies going from maybe a series A to, the unicorn phase. How can companies maintain this sort of horizontal expansion as well as depth creation? I think that would be super helpful, Gaurav.
Sure. I think it's extremely, extremely important that as you are scaling, you verticalize, right? Because if you don't verticalize, the overall, not only depth in terms of what you want to build, but also what the customer will end up experiencing is going to be very, very shallow, right? So what we do is, for every part of what we are building, we are constantly putting certain matrices, right? Beyond which you will have to verticalize, right? So as you're building the components, you have a horizontal on top, you're launching product one, you take it to a certain scale, verticalize end to end, move to the next product, take it to a certain stage, verticalize end to end. Now, one learning is the peculiarity of this is actually to do with people, right? And which most of the founders will, experience as they're moving from horizontal to vertical, and then again from vertical to horizontal. And the question is that the moment you verticalize, right, the team will come back on very different level of feedback on their own exposure and sense of what is being built. So while somebody is working on horizontal, they get to see the entire breadth, right? And sometimes we mistake breadth to the depth and richness of experience, right? So the moment you cut down on breadth and you ask to focus on depth, right, there is very fine line between depth, getting siloed, getting boxed, etc., etc., right? But it's a very, very tight rope that unless and until you have a very collective buy-in and you're building the culture in such a fashion where you are saying we are going to constantly innovate, we are going to constantly build new things, right? But if we continue to be horizontal, we will collapse. We will be good at nothing. We will not be able to execute, right? So there is a reason why we need to verticalize, and certain leadership which was focused on breadth will have to cut down the scope and go on depth, right? So sometimes, founders themselves are reluctant to have these kind of early, very transparent and tough conversations, because as I said, there is genuinely a tendency to mistake, breadth with richness of experience, right? Whereas in our mind and our culture, your richness of experience is a function of scale, right? Because scale brings in very different level of challenge to you, both right from engineering, product, as well as leadership, right? So that's extremely important. The second piece is about the roadmap, which is allowing you to go into the adjacent spaces, right? So that has to come from the team very early, right? That when we are looking at anything, even the guys who are focused on the vertical, because the moment you're vertical, you're very close to the customer, you're very close to the problem statement. You are the right team to talk about the next adjacencies, right? For example, our entire investment in building the collection infrastructure actually came in from our retail co-lending leaders, because they could see that pain point, right? Where everybody wanted collections to be switched on, because a lot of loan and retail throughput was going through our platform, right? Now the question then was, should we build on our own, or should we go about and partner and acquire, right? And then even when you're acquiring, it becomes horizontal, right? So I think this combination, I think, is an important combination tactically, but my view is the success will not lie in terms of just the nuts and bolts. The success will lie in terms of very clear communication of why vertical or depth, right, does not mean that your charter is being reduced.
Yeah.
Your exposure is being cut down, right? Because the first question which senior leadership will ask you, that I was first managing 4 things, 4 parts of what we were doing. Now you are asking us to manage 1.
Yeah.
Right? And then you are under that fear that, whether you will lose that talent because you're going vertical, right? So I think, celebrating verticalization, to my mind, and celebrating depth as a culture is very important for you to build horizontal. Otherwise, you will never be able to build horizontal if you don't celebrate the depth part of it.
Got it. Wonderful to hear that. And a lot of focus and a lot of cognizance in terms of priority is there as well. So great to observe that thought. I think going forward, Gaurav, I think I have a couple of last questions. This is a series of similar questions that I ask each founder, and this is more personal in nature. One of them is primarily in terms of how you maintain a balance between execution, reflection, and absorption, right? Sometimes it can tend to get easy to keep executing and reach the next milestone. But I'm guessing part of your responsibility as a founder is definitely to keep the eye on the ball in terms of what's next or what's down the next decade, right? If you can help us absorb how you maybe maintain a balance between executing, reflecting upon what is happening and what's the next step, and also just absorbing new things and new information for that matter. I think that would be very, very helpful for anybody who's young and looking to build a company in the long run.
Sure. I think I'll kind of more tactically split into 3 parts, right? One is about what I call as hands-on leadership, right? Which means that, you're very close to what's happening, but you're not involved. Right? And you can actually step in when you see that need for you to be stepping in. Right? So sometimes I think there's a very fine line between, delegation and hands-off management. Right? So I think being hands-on is very important with delegation, which means that you can step in when a team needs help. You need to be really providing them help, because you won't be able to help them if you don't have the right context. Right? And if you're not very closer to the ground without getting involved on a day-to-day basis, right? So first bucket is about very hands-on, approach to what's happening on execution, right? Second, to my mind, is also, surrounding yourself with people who can challenge you, right? So I think one piece which at least I have done is to also have advisors and advisory board, right? Who are constantly challenging you on different dimensions, right, of what's being built, where the next frontier is, where we should be going, right? Are we moving in the right direction, right? Are we taking any shortcuts, right? Are we over indexing on the long term? So having people with very diverse experience, and there also one criteria which I've had is to have advisors, or what I call as mentors, who have done that journey on their own, right? So who have built massive franchises and ended up building an institution. Because today at CredAvenue, we are still an organization, we are not an institution.
Yeah.
Right? We are on that journey of becoming an institution. So bringing in that level of perspective, I think, also helps you to recalibrate, rethink, right? And third is about my own time, starting Saturdays evening to mostly Sundays. It just goes in terms of reading and investing in myself, right? To keep myself abreast on what's happening, because the nature of business we are in, especially FinTech, is very dynamic. Right? So it's dynamic on what's happening on technology, it's dynamic on what's happening regulatorily, right? So you have to be constantly at it to keep yourself ahead of everybody else, right? So that's your thinking time.
Yeah. Got it. No, I think that breaks it down very well in terms of your leadership style, as well as, it's important to keep investing in yourself. So great to have that re-emphasized by you. I think the other piece is in terms of just personal scaling, right? Very often we talk about company scaling, and of course, those are numbers which can be quantitatively defined, but people scaling and qualitative scaling is hard to tangibly quantify. If you can talk about what the entrepreneurship journey has shaped you into becoming, right? What it was maybe before it, and how at each step in time are you taking charge and growing and finding things about yourself. I think that would be super helpful from a lens of understanding how somebody at your stage thinks, and what that does in terms of how the entrepreneurship journey shapes somebody.
Absolutely. So I think one to my mind is also about just thinking through context switching. Yeah. Right. I think that to my mind has been one of my biggest learning over the last now 16-17 years. That are you able to context switch, especially when you are doing this 0 to 1, 1 to 10, and 10 to 100 very fast. Yeah. Right. And across multiple verticals and horizontals. Yeah. Right. So that I think has been a big learning about myself. Right. Second is about patience. To my mind, I think the first company, I think sometimes you have a lot to prove to yourself. I'm not saying it's not there when you are starting again and again, but because you have not built muscle memory, you have not gone into those realms, right? You're plagued by constant self-doubts. Right? And you constantly question yourself, right? Whether you're good enough or not, right? So I think that to my mind, which is much more about getting the right team, ensuring that the team is really focused on the why, and you are hands-on, but you're not getting involved. I think that to my mind is very important, and that comes through learning, right? That how do you let go, right? I think is the second biggest learning, that you need to let go of a lot of things. You might have to let go of a lot of your own ideas, because the team will challenge you, right? And the best idea will win, and it might not be your own idea, right? So when you are starting with the vision, I think others are coming and adding to that vision, and you need to appreciate and ensure that you're co-creating that piece with them. I think that's the second learning, because I think sometimes in the first one you are either more impulsive, or you think what you're thinking is the only way to go about executing, right? Third to my mind is not hiring the team early, right? I think sometimes that there's a dissection between the P&L and investment. I personally think that as an investment. Now that's been a big learning, right? So if I had to redo it, I think I would say culture. That's something which will not change. How do you obsess about it? Because your product and everything else will change. Second is governance, right? Ensuring that you have the right set of governance framework. Again, it's not a cost, it's an investment. And third, again, team. It's not a cost, it's an investment, right? So the sooner you do these three, right, the more thinking time, reflection time you will have in terms of what's happening. The later you do it, you will constantly be caught in that sense of execution, right? And one more last message I will leave it largely is about, to the point you earlier made, for us, I think more than growth, it is about defensible growth. It's not about growth at any cost.
Right.
Right. So I think we celebrate defensibility over growth. So at every level, we are constantly thinking, has that growth come in with the right leading indicator? So as an organization, we are obsessed about leading indicator and not lagged indicator. Right? So even if your lagged indicator has moved and leading has not, we still get concerned.
Got it. That's brilliant. I think that distinction there about defensibility, and also a lot of interesting pointers about just be cognizant of what is important and being patient in the long run and not having those self-doubts. I think all of those pointers make a lot of sense. For the second last question, Gaurav, I think in my brief research leading up to the episode, a lot of people mentioned that there are these strong, if not strong, there are these values and principles that you live by, be it empathy, humility, and multiple other things. And some of these things are very core to founders. If you had to give us a preview of, what are some core principles that are non-compromisable on a day-to-day level that guide you as a founder and as an individual, I think that would be brilliant to hear.
I think I'll share two. I think one is work ethic. Right? I think sometimes we celebrate a lot of brilliance and innovation, and sometimes in startup you end up celebrating a lot of chaos over process, right? So I think work ethic, to my mind, is very, very, very important, and I think that's a value which I cherish a lot, and that's one of our core cultural values as well, which is about outworking the rest, right? So I think that's something which is important. The second is about long-term thinking always. So you might be under tremendous amount of pressure for multiple reasons, varieties of reasons, etc. But you have to take a decision which actually makes sense when you reflect on that decision after a year, 2 years, right? So I think these two, to my mind, would be important. And third thing which has also helped is, I would say, radical candor, right? So having candor with empathy, I think, is something which I genuinely value across, whether people give that feedback to me or I share that with people who are currently working with me.
Incredible. That was great to hear. I think for the last question, and this has been absolutely spectacular, I would love to go back and maybe ask you about your core motivation in building CredAvenue as a second time or a multiple time founder. It can tend to seem from the outside that there's so much that's already been done. What is the motivation still to go out there and create that value to build a long-term institution? If you can maybe reflect and talk to us about the qualitative as well as maybe the quantitative goals and impact that you want to achieve with CredAvenue as an entrepreneur, fundamentally to go out there and build, I think that would summarize this wonderful conversation.
No, I think, to my mind, we have not even built 1% of what we will end up building, right? So, sure. I'm constantly thinking of CredAvenue to be like a public good. Right. Because today, if you look at what generally gets me out of bed, every day, and I think we're just scratching the surface. We're thinking about the next 20 years. One, I think every company has an impact on its customer, right? But there are very, very few companies which can impact the society around them and can impact the nation, right? And we are one of the privileged which can not only impact our customers, but we are also impacting the society around us. Right. And we are also going to impact the nation on increasing the debt to GDP of this country. Right. And I think that, to my mind, is very, very transformative. Right. So for all of us at CredAvenue, it's all about leaving a legacy behind. Right. And given that we are in a privileged position, I think it's our fiduciary role not to let our stakeholders down. Right, because if we get this right, the impact on society, the impact on the nation is very, very high, and not too many companies have that opportunity.
Absolutely. I think that brilliantly sums up what we've spoken about. Thank you so much, Gaurav, for being your candid self and sharing your kind learnings with us. I think I certainly have taken back a lot of from this conversation, and I'm sure everyone listening in will as well. I hope you enjoyed it as much as I did.
Thanks a lot for having me. Very, very insightful questions. Really enjoyed the conversation.
Thank you so much. Super kind of you to mention that.
Thanks a lot.